Hey everybody, Boris. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar, the majors. My apologies, I sound like a frog this week. I am under like a very, very vicious little bug that my 3-year-old gave me. So again, my apologies that I sound so stuffed up. But nevertheless, let's proceed because it's been a very, very interesting weekend. And one of the beautiful things about the Forex market that I absolutely love is that one week becomes completely diametrically opposite to the other. Remember that last week I titled the majors headline as "Forget the Fed," and this week specifically, really just sort of as an ironic manner, I'm renaming this week's title as "Remember the Fed." Everything we talked about last week, I think, has flipped 180 degrees because we had a markedly better than expected non-farm payrolls, unambiguously good on all fronts, good on wages, good on growth, good on jobs, good on unemployment, and it effectively really does put, I think, the Fed hike back on track. Ironically enough, the other thing that I have always been arguing, that the political situation in the U.S. is so fraught with peril because of the incredible partisanship that we have now in this election, that I thought that the Fed would stay away from doing anything prior to the election. But given the implosion of Trump in the last week, and this is the critical thing, this is I think the most important thing. I still think that there's a smaller than a 50% chance that the Fed will hike in September. But if we get to a point where Trump really continues to implode, the Fed actually maybe feel emboldened to act because it will not feel like it's going to interfere in the election one way or the other. So I think there's two possible scenarios here that can play themselves out. The Fed is either going to very, very clearly say, hey, we're ready to tighten monetary policy, is ready to lift off the zero bound, but we're going to do our first normalization or our second normalization in December, and they will literally say something like that to the effect, basically communicating that December is going to be a go date. The other more aggressive posture, of course, is they simply literally hike in September, which would be unexpected. At this point, the market is about a 47% odds September hike, 75% odds D's hike, and the thing that really determines just how strong or how weak that thesis is going to be is, of course, U.S. data. We have retail sales coming up this week, consumer sales. That's really the only thing that's really on the docket. Relatively quiet week across the board on the market, and we're entering now into the dog days of summer. So I don't anticipate too much action, but anything positive on the U.S. side just adds fuel to the whole Fed hiking September thesis. Really, I think, puts a bit underneath the dollar and makes the whole trade much, much more favorable towards the dollar. So euro, in that sense, begins to fail again. We don't have that much European data on the docket this week. I just want to check and see. There really is it's just an incredibly boring week, truly a boring week in the FX market. We have some Chinese data. We have immediately the big event risk is all going to be in the commodity dollars, but on the majors we just have UK data. The UK data, by the way, is going to be kind of interesting. So the other sub-story this week in the majors was the cut by the BOE of 25 basis points, not a full 50 basis point cut, and a kind of a vague promise that they would go down to zero bound if need be. They clearly are concerned. But now, this is where it gets very interesting. Now, I think, just like with the US data, every data piece is going to be amplified to the marketplace. What I think is fascinating now, and this is the most interesting takeaway from everything that's been going on over the last couple of weeks, is that after a long, long period where the only thing that mattered in the currency market was the actual central bank policy manipulation, we may be getting to the old period when economic data now begins to matter, so this week, for example, we have UK manufacturing and industrial production, and that could actually be a market mover because every data piece is going to essentially telegraph whether the central bank is going to cut or not. In really the last 2 or 3 years, data has not mattered at all, simply because the central banks either stayed at zero or went to zero. But now that they're sort of either going the other way, all the way towards zero, or moving off the zero bound, economic data becomes much more crucial. And I think that's the interesting takeaway. We should all be looking for more impact from reports that just simply never hasn't existed for 2 or 3 years. So get used to more volatility off economic data as we go forward. Now let's take a look at the support resistance lines. Euro is just sort of still in this 112, 109 level. We're going to take a look at the charts. Very interesting. It continues to fail at highs. still looks to me very much like a seller rally trade. And dollar yen has done something that I think is relatively bullish, which is a triple bottom higher low structure. 100 still the support, 104 now is the resistance, and cable still holding that 30 level, albeit very, 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 very tenuously. But that's going to be, I think, a new key hold for cable. Let's take a look at the charts here and just see what the possibilities lie. So here's euro. The most interesting thing about the euro, if you sort of ignore the near-term noise, is the continuation of failed highs. So we fail, we fail here, we sort of fail here, break out above the highs, and now we fail again. The critical thing, though, is that this 109.50, which is the Brexit inspired support, still holding. But I think, and this is the critical thing, if the market begins to feel that the Fed is really on path to hike rates, that's going to be the big battle. And a break of the 109.50 really does open up the run towards the 108s, 107s, for the first time, the market really begins to see the divergence of monetary policy. So be watching this very carefully. I think whatever rally, at this point, whatever rallies we have in the euro are very much seller rallies, right? Unless we have surprisingly weak U.S. data, which doesn't seem possible. The move in the euro, I think, to me now becomes a move to the downside, and it's essentially a seller rally. Anytime if we can get 11.50 here, probably going to be a very good positional trade to get down all the way down to 109.50. As I said, the first level of support before we break the multi-month support in the euro. Dollar yen has a very clear, still very tenuous. I'll be the first one to admit it's a very tenuous structure, but it's still a pretty clear one. You have a series of higher lows here, a triple bottom. So we have the 98, 100, 101 bids here, and as long as we can hold the 101s, we do have a possibility here to extend 103, 104s. A lot of it, of course, is going to depend on yields, on market tenor about how they feel about the Fed. But I think if the market begins to really start to price in a possibility of a Fed hike, you'll see the dollar yen get very, very perky to the upside, because the interest rate differentials are going to start to really play into the dynamic. For now, as long as this 101 holds, it's very much a buy the dip story, and I kind of really like it, and I think it's it's an interesting trade. Now cable, we talked about the idea that cable has held the 30 level for a good month, right? Pretty much the month of July. After the post-Brexit lows, it's been bouncing between 35 and 30, and now it's very much at the lows. And a lot of this is, I think, going to be contingent on UK data. We don't have that much data this week. We have, of course, the manufacturing industrial production. We'll see if that sort of dies off a cliff. We're certainly going to test the 30s, probably could dip below it. The next level, of course, is this 127.50, which is the post-Brexit highs, and we'll see how well cable can hold around this level. Again, it all, to me, the interesting thing here, and I'm going to be watching prices, but my fundamental thesis is that because there's zero political will to actually enact cable, to put cable into play, to enact Brexit and put Brexit into play, it could be a tempest in a teapot. In other words, UK economy could snap back. We just need some evidence of UK economy stabilizing and snapping back, at which point you're going to see the mother of all short covering rallies in cable, simply because it's been really priced for destruction at this point. So I still think it's tenuously holding on to this. The 27.50 is going to be, if we test to the downside, it's going to be 27.50 support. We'll see how well it trades around there. Still could be sort of a contrarian play of trying to buy the dips here. But this is all really contingent on the thesis that the UK economy is not imploding. If we see further evidence of the UK economy really imploding, I mean, if this month's PMI, September PMIs, which we don't get a chance to see, for another couple of weeks, really get markedly worse than they were before, then that whole thesis is off. But if they simply stay the same, or maybe even just improve a tad bit, they don't have to be positive, they just simply have to stay the same and improve a tad bit, you're going to see a much more stronger base in cable. And contrary to every conventional view, cable is really going to rally, I think, off that thesis. So for the week, I like selling short euros, like buying the dips in the yen, and kind of just watching cable for the time being to see how well it reacts around this 130 level as we go forward. Wish you guys the best luck, best of trading. Boris, over and out.